Good day, Sir Sherwin. Today we will discuss Chapter 5, which is all about bonds payable and it focuses on fair value option. Before we proceed to the discussion proper, let's identify first the learning objectives of this lesson. First, to understand the nature and purpose of a bond. Second, to identify the types of bond. Third, to know the measurement of bonds payable. Fourth, to understand the concept of bond premium and bond discount. Fifth, to describe the methods of amortizing bond premium and bond discount. And lastly, to apply the fair value option of measuring bonds payable. Now, first let us define bond. Unsa man daani ang bond? When you hear the word bond, what comes to your mind ba? Diba, when we hear it, diba, sometimes makaingon ta nga, ay bond, it's part sa corporation. Yes, it's true. But before we proceed, ano nga, part na siya sa corporation, let us read first the definition of a bond. A bond, to know, it's a formal and conditional promise made under seal to pay a specified sum of money at a determinable future date, and to make periodic interest payment at a stated rate until the principal sum is paid. So, a bond kuno is an obligation or a liability. It is a promise nga mobayad og money in the future or determinable future, and apil na po diri ang interest until mabayaran na ang principal amount. Diba usually when we hear the word bond, come up taog idea nga part na siya sa corporation. Yes, that's correct. Because ang bond is primarily used by the corporations and even sa government units. So gi-issue ang bonds po sa corporation because according to its definition, it is made under seal. So, I hope nasabtan ra. So, in simple words, ang bond is a contract of debt and it consists of two parties, nga si issuer o si investor. Si issuer mo borrow og funds from the investors, and take note, si investors dili ra siya usab, but it could be nga daghan sila. So, pwede sila investors. So, in other words, when you say bond, mangutang ka og dakong amount ng money sa mga investors. Also, ang bond is evidenced by a certificate and bond indenture, in which ang bond indenture is a document, and later on we will discuss about this. Ato ni siya i-tackle more. So next, we'll tackle about the classifications of bonds. So first, we have term bonds. From the word itself, term meaning usara, means bond with single maturity date. One-time basis siya ni mo bayaran ang principal amount. On the other hand, naatay serial bonds. Opposite ni siya sa term bond, which is series of payment, mao gitawag siya og serial. Meaning, balik-balik ka og bayad sa imong principal amount. So, bali mahulog siya og installment basis nga kind of bonds. So, the next three bonds that we're going to tackle about is ang secured and unsecured bonds. So, asa man at ani nga tulo ka bond ang secured ug asa pud diri ang unsecured. So, first, we have the mortgage bonds. If it is ang mortgage bonds is a secured bond, and ang iyang security would be the real properties. Next is collateral bonds. Part Japanese siya sa secured bonds, and ang iyang security kay ang mga shares and investments sa other corporations or company. On the other hand, naatay debenture bonds. Ang ikatulo nga bonds is different kay it is unsecured bonds, meaning wala siya collateral security. The next is the registered bonds. If registered bonds, dapat kay baw or na-acknowledge ang company na nag-issue kung kinsa ang holder sa bonds as of a certain date. So in here, dapat required jud ang pag-register sa bonds. Next is the coupon or bearer bonds. In this case, kay no need na for registration compared sa registered bonds kay, but kung kinsa na lang tong bearer sa bonds with regards sa payments sa interest, siya na ang makadawat or siya ang holder. Next would be the convertible bonds. In this kind of bonds, kaya there is a conversion of shares nga nahitabo sa mga investors. Mura siya part sa strategy sa investors nga mag-start sa bonds and later on i-convert. And then next, we have callable bonds. Means ang bond nga ma-retired that before its maturity date. And then we have the guaranteed bonds. Guarantee for sure na adjud ni guarantor means if di makabayad ang isa ka party, then na ay third party which is who is the guarantor nga mobayad in behalf sa isa ka party nga di makabayad. The next we have the junk bonds. From the word itself, junk, di ba, basura, so wala na gamit, meaning to say ang kani nga bond is basura na nga bond. So the company nga nalugi na kay mo issue og bonds nga high yielding interest, patasan nila og interest ang company because nawa sila intention nga bayaran to nga interest, so there's a high risk nga scam nga mahitabo. Zero coupon bonds. Zero pertains sa zero interest rate, meaning ang utang kay walay interest. But possible ba nga walay interest ang utang? No. In every utang jud na hidden interest or naa jud interest, but in this case ang interest lang kay hidden. So ang interest is the difference between sa face value and the issued price. Nakatago ang interest in a form of discount. So that would be all sa different classifications of a bond. Next, we'll talk about the features of bond issue. So we have first a bond indenture, diba? Nakatakol na taog bond indenture from the first part pa lang of this discussion. So ang bond indenture or deed of trust is a document which shows in detail the terms of loan and the rights and duties of borrower and other parties to the contract. Meaning to say, ang bond indenture is a document, meaning nga ang agreement between the two parties kay naa na dito tanan, nakahanay na kung unsa ang ilahang obligation, ang ilang agreement atong contract. Next, we have bond certificates. It is used, each bond certificate represents a portion of a total loan. So the usual minimum denomination in business practice is 1,000 jud, although smaller denominations may be issued occasionally. Next is naatay trustee. If property is pledged as security for the loan, a trustee is named to hold the title to the property serving as a security. The trustee acts as the representative of the bondholders and is usually a bank or a trust entity. Next is a bank or trust entity is usually appointed as registrar or disbursing agent. So the borrower mo deposit of interest and principal with the disbursing agent, and then ang disbursing agent will distributes the fund to the bondholders. The next, we have the contents of bond indenture. So ang bond indenture document na siya. So mao ni the following would be kung unsa ang sulod ani nga document. So first, we have the characteristics of the bonds. Second, the maturity date and provision for repayment, period of grace allowed to issuing entity, establishment of a sinking fund and the periodic deposit therein, and then deposit to cover interest payments. Next, provisions affecting mortgage property such as taxes, insurance, coverage, collection of interest or dividends on collaterals. Then, access to corporate books and records of trustee, certification of bonds by trustee, required debt to equity ratio, and then lastly, minimum working capital to be maintained if any. So, in sale or issuance of bonds payable, very often, ang bonds are divided into different denominations, thus enabling one or more buyer or investor nga mo-purchase of bonds. So, instead nga ibaligya ang bonds into different denominations, it was then decided nga why not ibaligya na lang in equal denominations. Let's say 1,000 each. So, ang 1,000 represents the face amount of the bonds. Now, let's say na ay 50 million nga face amount. Then, you will have to divide it sa 1,000 nga denomination. So, na ay 50,000 nga bond certificate na i-issue containing sa face amount nga 1,000. So, this bond certificate, as I was saying earlier, kay serve as an evidence. Na diba ang bond issue kay ibaligya man, dili ibaligya sa entity ang bond directly sa public but through ni underwriter. So kinsa man ni si underwriter? Si underwriter has an obligation nga i-resell ang bonds directly to the investors. Now, And when the entity sells a bond issue, it undertakes to pay the face amount of the bond issue on maturity date and the periodic interest. So the interest is usually payable semi-annually or every 6 months. It could be mupay siya starting from January 1 and then ma-end to July 1. Or it could be sa February 1 and ma-end sa August 1. Sa March 1 and then ma-end sa September 1. Or April 1 and then ma-end sa October 1. Or it could be May 1 or ma-end sa November 1. And then it could be sa June 1 and ma-end sa December 1, which is the last month of the year. Now take note that not all the time semi-annually jud siya. There are certain bonds po that pay interest annually or at the end of every bond year. So next, we'll tackle about the measurement of bonds payable. So naa siya initial measurement and subsequent measurement. So as for initial measurement, according to PFRS 9, paragraph 5.1.1 provides that bonds payable not designated at fair value through profit or loss shall be measured initially at fair value minus transaction costs that are directly attributable to the issue of the bonds payable. So, ang fair value represents are equal to the present value of the future cash payments para masettle ang bond liability. However, if ang bonds are designated and accounted for at fair value through profit or loss, the bond issue cost will be treated as expense outright. So, the fair value of the bonds payable kay same ra siya sa issue price or the net proceeds from the issue of the bonds and then excluding na diri ang accrued interest. So, as for the subsequent measurement pod of the bond payable, according again sa PFRS 9 in its paragraph 5.3.1 provides that after initial recognition, ang bonds payable shall be measured either the following. So, na siya option nga mo measure, duha ka option nga mo measure. First is at amortized cost using the effective interest method and then at fair value through profit or loss. So, ang amortized cost of bonds payable is the amount at which the bond liability is measured initially minus the principal repayment plus or minus the cumulative amortization using the effective interest method of any difference between the face amount and principal value of the bonds payable. So actually, the difference between the face amount and sa present value is either discount or premium on bonds payable. So ang kaning discount and premium will be tackled later. Slide will be accounting for issuance of bonds payable. So in here, there are two approaches. We have memorandum approach and the journal entry approach. So to record the issuance of bonds at the face amount, we have in memorandum approach, we have to debit cash and then credit bonds payable. On the other hand, to record the authorization of bonds in journal entry approach, we have to debit and issued bonds payable and then credit authorized bonds payable. And then to record the issuance of the bonds at face amount sa journal entry approach gihapon, we have to debit cash but now we have to credit and issued bonds payable. Issuance of bonds payable at a premium. So, if the issue price is more than the face amount of the bonds payable, the bonds are said to be sold at a premium. So, we have an example here. For example, an entity issued issued bonds payable with face amount of 5 million at 105. So, ang 105 dere is 105%. So, the journal entry would be cash 5,250,000 and then the issue man siya og bonds payable amounted to 5 million and then credit bonds payable 5 million and also you have to credit premium on bonds payable nga 250,000. So next is the entity to record the amortization of the premium on bonds payable is you have to debit premium on bonds payable which is amounting to 25,000 and then interest expense which is ang 250,000 gi-divide into 10 years. Gi-amortize siya. So that would be 25,000. Now, for the issuance of bonds payable at a discount, it is the total opposite sa katong issuance of bonds payable at a premium. So, in here, if the issue price is less than the face amount of the bonds payable, the bonds are said to be at a discount. So, we have here an example as well. An example is, for example, an entity issued bonds payable with face amount of 5 million at 95, so meaning 95%. So the journal entry would be cash is, you need to multiply the 5 million to 95%. So that would be 4,750,000. And then you have to also debit the discount on bonds payable, which amounting to 250,000, and then you have to credit the bonds payable, which amounted to 5 million. So the entry to record the amortization of the premium on bonds payable is you have to debit interest expense. So, ang interest expense, i-divide ang 250,000 by 10 years. So, that would equal to 25,000. And then, credit premium on bonds payable, which is also equal to 25,000.
Let's proceed to the presentation of bond discount and premium. Discounted bond payable and premium on bond payable are reported as adjustments to the bond liability account. The discount on bond payable is a deduction from the bond payable, whereas the premium is reported as an addition. So this treatment is based on the theory that the discount represents the amount that the issuer cannot borrow because of interest differences, and the premium represents an amount in excess of face amount that the issuer is able to borrow. So the discounted bonds payable and the premium on bonds payable shall not be considered separate from the bonds payable account. Both accounts shall be treated consistently as valuation accounts of the bond liability. Presented here is an example of statement of financial position. So as I have mentioned earlier, the discount on bonds payable is deducted from the bonds payable. So in this example, the bonds payable is amounted to 5 million and the discount on bonds payable is 250,000. So to arrive for the non-current liabilities, we simply deduct 250,000 from 5 million. That's why we came up with an amount of 4,750,000. Proceeding to the premium and bonds payable, we simply add it on the bonds payable amount. So, with the same amount of bonds payable, which is 5 million, and the premium on bonds payable, which is amounting to 250,000, we add it, so we have a total of 5,250,000. Bond issue costs. So, bond issue costs are transaction costs directly attributable to the issue of bonds payable. Such costs includes printing and engraving costs, legal and accounting fee, registration fee with regulatory authorities, commission paid to agents and underwriters, and other similar charges. So under PFR is 9, ang pag-measure sa initial bonds payable is dapat deducted ang bond issue cost from the fair value or issue price of bonds payable. So under the effective interest method of amortization, the bond issue cost ay dapat lumped with the discount on bond payable and netted siya against the premium on bonds payable. However, if the bond are measured as fair value for profit or loss, immediately recorded as expense ang bond issue cost. Recording interest and bonds payable. Accounting for interest, expense, and bonds payable requires recognition of two items, namely, first, the payment of interest during the year, and second is the accrual of interest at the end of the year. So here is an example illustration on the issuance of bond payable and interest date. On June 1, 2021, an entity issued bond payable with face amount of 5 million at 97. The bonds mature in 5 years and pay 12% interest semi-annually on June 1 and December 1. The straight line method is used for simplicity in amortizing discount on bonds payable. So here are the journal entries. On June 1, 2021, we record debit cash 4,850,000. We came up with this amount by multiplying 5 million by 97%. Next, we debit discount on bonds payable. So we deduct 97 from 100, and that's 3. We multiply 3% by 5 million to get the discount. That's why we have 150,000. And then we credit bonds payable with its face amount of 5 million. On December 1, 2021, we debit interest expense 300,000, which is a result from by multiplying 5 million by its interest rate, which is 12%, and by multiplying it to the fraction of 6 over 12, since it is a semi-annual interest payment. And then we credit cash with the same amount of 300,000. On December 31, 2021, we have a record of debit interest expense 50,000 and credit accrued interest payable of 50,000. We came up with this amount by multiplying 5 million by 12%, which is its interest rate, and by multiplying it to the fraction of 1 over 12, since the interest accrued is for 1 month, and that's from December 1 to December 31, 2021. So still on the same date, we have another record. We debit interest expense with the amount of 17,500 and a credit of discount on bonds payable 17,500. So we came up with this amount by dividing 150,000 by 5, and that would result to 30,000. And then since the amortization of bond discount would start from June 1 to December 31, 2021, so if we count the months within those the range of period, will have 7 months. So we multiply 30,000 to the fraction of 7 over 12. So that's why we have 17,500. For the year 2022, we have these following entries. For January 1, we record a reversing entry of the entries in December 31. So we would debit accrued interest payable of 50,000 and credit interest expense of 50,000. For June 1, we would record a semi-annual interest payment. We debit interest expense of 300,000 and credit to cash of 300,000. Coming up with the amount of 300,000 would still be obtained with the same process on how we do it in the year 2021. So proceeding on December 1, interest expense, we would debit interest expense of 300,000 and a credit to cash of 300,000, still with the same process. And again, that's still a semi-annual interest payment. So on December 31, we would debit an interest expense of 50,000 and a credit of accrued interest payable 50,000, and that's an interest accrued for 1 month. Coming up with 50,000 would still be done with the same process and how we did it on the year 2021. So still on the same date, we have a second entry. Interest expense, we debit interest expense with the amount of 30,000 and credit to discount on bonds payable with the amount of 30,000. And that's the amortization of bond discount for year 2022. So presented in the slide is an example illustration on the issuance of bonds between interest dates. On April 1, 2021, an entity issued bonds payable with face amount of 5 million at 5,228,000 plus accrued interest. The bonds are dated January 1, 2021, mature in 5 years, and pay 12% interest semi-annually on January 1 and July 1. So to record the issue of the bonds payable on April 1, 2021, we have these following entries. So we debit cash 5,378,000, credit bonds payable 5 million, premium on bonds payable 228,000, and interest expense with the amount of 150,000. So the bonds payable is 5 million, so since we record it on its face amount value. The premium on bonds payable is a result from deducting 5 million from 5,228,000. And the interest expense, the value of interest expense, we got that by multiplying 5 million by its interest rate, which is 12%, and by multiplying to the fraction of 3 over 12, since it is a 3-month period between January to April. Note that if the bonds are issued between interest dates, an accrued interest is involved. So normally when bonds are issued between interest dates, the accrued interest is paid by the buyer or investor. The accrued interest on the date of sale for 3 months from January 1 to April 1, 2021 is paid by the investor because on July 1, 2021, 3 months after the sale, the investor is going to receive interest for 6 months from January 1 to July 1, 2021. The accrued interest sold is credited to interest expense. On July 1, 2021, the journal entry to record the payment of semi-annual interest is interest expense 300,000 and credit cash 300,000. So we came up 300,000 by multiplying 5 million by 12% and by multiplying to the fraction of 1/2 since it is a semi-annual. The interest is paid semi-annually. So note that if at this point the interest expense account is posted, it has a debit balance of 150,000, which represents the correct amount of interest expense from April 1 to July 1, 2021.
Bond retirement and maturity date. Para mas attractive ang dating sa bond issue, an entity may agree in the bond indenture na mag-establish og sinking fund exclusively for use in retiring the bonds at maturity. The periodic cash deposits plus ang interest na na-earn on sinking fund securities should cause the fund to approximately equal the amount of bond issue on maturity date. When the bond approaches maturity date, ibaligya sa trustees and securities and uses the sinking fund para bayaran ang bond holders. Ang excess sa cash kaibalik sa issuing entity.
So presented in this slide is an example illustration on the bond retirement and maturity date. An entity issued bonds payable with face amount of 5 million on March 1, 2021 with 12% interest payable on March 1 and September 1, and the bonds mature on March 1, 2026. On March 1, 2026, the journal entry to retire the bonds payable together with the payment of the last semi-annual interest out of a sinking fund is with debit bonds payable 5 million, debit interest expense 300,000, and credit sinking fund with the amount of 5,300,000. We came up with 300,000 as an amount sa interest expense by multiplying 5 million by its interest rate, which is 12%, and since it is a semi-annually paid interest, we divide 600,000 by 2. So if a sinking fund is not used, the payment of the bonds will come from the general cash of the issuing entity. That's why we debit here bonds payable 5 million, debit interest expense 300,000, and credit cash 5,300,000. So the amounts are just the same. The only thing that differs is the account title in the credit part.
Bond retirement prior to maturity date. When bonds are reacquired prior to maturity date, the bond may be cancelled and permanently retired or held in the treasury for future reissue when the needs for fund arises. The retirement of bonds payable prior to maturity date may present some complex accounting problems. If the reacquired bonds are cancelled and permanently retired, the following procedures are followed. First, the premium or discount on bonds payable should be amortized up to the date of retirement. Second, the balance of the premium or discount on bonds payable should be determined. The balance is important because the amount related to the bonds retired is cancelled. Third, the accrued interest to date of retirement should be determined. Fourth, the total cash payment should be computed. This is equal to the retirement price plus the accrued interest. The retirement price is certain percent of the face amount of the bonds payable. Fifth, the carrying amount of the bonds payable retired is determined. The face amount of the bond plus the amortized premium or minus the amortized discount on bonds payable gives the carrying amount of the bonds payable. Sixth, the gain or loss on the retirement of the bonds payable is computed. The gain or loss is the difference between the retirement price and the carrying amount of the bonds payable. If the retirement price is mas dako pa sa carrying amount of the bonds payable, the difference is a loss. Otherwise, if the retirement price is mas gamay pa sa carrying amount of the bonds payable, the difference is a gain. Lastly, the retirement of the bonds payable is then recorded by canceling the bonds payable together with an amortized premium or discount on bonds payable. Any accrued interest is debited to interest expense.
So to illustrate, on March 1, 2021, bonds with face amount of 5 million are issued for 4,730,000. The bonds are dated March 1, 2021 and mature in 5 years and pay 12% interest semi-annually on March 1 and September 1. The straight line method of amortization is used for simplicity. So as what the previous reporter discussed, when we say straight line method of amortization, meaning amortize siya ang discount evenly. All of the bonds are retired on July 1, 2024 at 97. The amortization of the discount on bonds payable is recorded up to July 1, 2024. So, March 1, 2021 mag-start ang amortization up to July 1, 2024. If the entity used the calendar period, presumably, the last amortization was on December 31, 2023. So, thus, an amortization of the discount on bonds payable for 6 months from January 1 to July 1, 2024 should be recorded, debit interest expense, and then credit to discount on bonds payable 27,000. Why 27,000? It's because 270,000 kanin 270,000 kay mao ni ang discount kay di ba ang bonds payable face amount is 5 million and then na-issue siya of 4,730,000. So the difference is 270,000. 270,000 divide 5 years is equal to 54,000 annual amortization, and then the problem here stated that the interest would be paid semi-annually. So, ang kaning 54,000 annual amortization, kay katungaon siya para ma-semi-annual na siya. 2. Balance of the discount on bonds payable. Discount on bonds payable March 1, 2021 nga katong 270,000, and then less amortization from March 1, 2021 to July 1, 2024. Di ba? March 1, 2021 to July 1, 2024 is equivalent to 40 months. Over 60 months, okay, 60 months is equivalent to 5 years. Times 270,000 is equal to 180,000. 270,000 minus 180,000 is equal to 90,000. And that's the balance for July 1, 2024. So, the accrued interest on the date of retirement, July 1, 2024, is computed as 5 million times 12% times 4 over 12 is equal to 200,000. Why multiply 4 over 12? It's because, di ba, ma-retire man ang katong bonds kay July 1, 2024. So, from March 1, 2024 to July 1, 2024 is 4 months. To compute total cash payment, katong retirement price nga 5 million times 97 is equal to 4,850,000. I-add ang accrued interest na 200,000, muna na ang total cash payment, 5,050,000. Carrying amount of the bonds payable. So, bonds payable nga 5 million, i-deduct ang discount on bonds payable nga 90,000, that's 4,910,000. And muna siya ang carrying amount on July 1, 2024. So, to compute the gain on the early retirement or extinguishment, carrying amount of bonds payable is amounted to 4,910,000 less the retirement price katong 4,850,000. There we have the gain on early retirement worth 60,000. And then to record the retirement on the bonds on July 1, 2024, debit bonds payable nga 5 million and then debit interest expense nga 200,000, that's 5,200,000. Credit cash nga 5,050,000. Credit discount on bonds payable 90,000, and then credit gain and early retirement of bonds nga 60,000. So 5,200,000. Equal ra ang both sides, debit and credit. But what if daw that not all the bonds are retired on July 1, 2024? Suppose only bonds with face amount of 1 million are retired at 97. So instead of 5 million, so 5 million kay 1 million na lang ang katong ma-retire at 97. So same procedure gyapon natong buhaton. Debit interest expense sa pag-record sa amortization, debit interest expense ka 27,000 and then credit discount on bonds payable na 27,000. So, partially retirement of bonds. Why partially? It's because 1 million raman ang katong ato ang kwintahon kay instead of 5 million, 1 million na lang. On July 1, 2024, after recording the discount amortization, the discount on bonds payable will have an adjusted debit balance of 90,000. So, to compute the total cash payment, retirement price nga 1 million times 97, that's 970,000. I-add ang accrued interest on 1 million from March 1 to July 1, 2024. That's 1 million times 12% times 4 over 12, 40,000. For a total of 1 million, 10,000. Moto siya, total cash payment. Carrying amount of bonds retired and gain on retirement. Bonds payable retired katong 1 million. Less discount on bonds payable applicable to bonds retired. So 1 million over 5 million times 90,000, 18,000 is equal to 982,000. That's the current amount of July 1, 2024. Less pa jud sa retirement price nga 970,000, that's 12,000. 12,000 mo na ang gain on early retirement on bonds. Ang kaning discount ay nga 18,000 katong giles nato sa bonds payable retired. It's stated here nga, di ba, in as much as only 1 million face amount is retired, necessarily the discount applicable to the 1 million bonds or 1 over 5 kay 1 million over 5 million of 90,000 or 18,000 should be cancelled. Kay ang kaning 90,000 applicable naman ni siya sa katong 5 million nga face amount. So to record the journal entry of the retirement of the bonds payable with face amount of 1 million, debit bonds payable nga 1 million, debit interest expense 40,000, credit cash 1 million 10,000, credit discount on bonds payable 18,000, and then credit gain on early retirement of bonds 12,000. So remaining journal entries for 2024. On September 1, debit interest expense 240,000, credit cash nga 240,000. 240,000 came from 4 million nga katong nahibilin sa 5 million times 12% times 6 over 12. That's why 240,000. Why 6 over 12? Kay kanang, di ba, the amortization of the bonds payable was updated on July 1, 2024. So, from July 1, 2024 to December 31, 2024 is 6 months, equivalent to 6 months. And then, for December 31, debit interest expense 160,000, accrued interest payable 160,000. Kay 4 million times 12% times 4 over 12, that's 160,000. Then the last entries for December 31, debit interest expense 21,600, credit discount on bonds payable, amortization of bond discount for 6 months 21,600. Diba, if you can still recall katong 5 million pa ang face amount, 54,000 man ni ang katong discount, katong original. Yeah, kay 4 million naman lang ang nabilin, so ang imuha usman pod nimo ang katong discount nga discount sa bonds payable 21,600 kay 4 million over 5 million times 54,000 is equal to 43,200 annually nya. Annually man nya, semi-annual man ang pagbayad sa bond, so 43,200 divide 2 para tungaon na to, that's why 21,600. Treasury bonds are an entity's own bonds originally issued and reacquired but not concealed. Ang reason na ni ngano nga wala pa gihapon gi-cancel ang treasury bonds is because basin ang entity ga-assume sila nga basin magamit ra nila puhon ang bonds. So in other words, the treasury bonds should be debited at face amount and any related unamortized premium or discount on bonds payable should be cancelled. Illustration. An entity's originally issued bonds payable with face amount of 5 million at 105 or a premium of 250,000. Subsequently, the entity acquired bonds with 1 million face amount to be placed in the treasury at 103. So at the time of the reacquisition, the unamortized premium on bonds payable is 200,000 and accrued interest on the treasury bonds is 30,000, which is paid in cash. So now to record the acquisition of the treasury bonds, debit treasury bonds nga 1 million katong na-reacquire, and then debit premiums on bonds payable nga 40,000. This 40,000 is came from the 1 million treasury bonds nga reacquire over 5 million times 200,000. Debit interest expense nga 30,000, and then credit cash 1,060,000, credit gain on acquisition of treasury bonds nga 10,000. Ang kanini ang 10,000 kay gikan ni siya sa katong face amount of treasury bonds nga 1 million. Tapos plus sa applicable premium nga katong 1 million over 5 million times 100,000 nga 40,000 is equal to 1,040,000 katong that's the carrying amount. Carrying amount less requisition price nga 1 million times katong premium nga 103, in percentage ni siya 1,030,000. 1,040,000 less 1,030,000 is equivalent to 10,000. Mo na siyang gain on acquisition of treasury bonds. Reissuance at a discount. The treasury bonds are reissued for 900,000, and then to record, debit cash 900,000, debit discount on bonds payable 100,000, and then credit treasury bonds nga 1 million. Balance ra ang debit ug ang credit. Sunod, statement presentation. So the treasury bond should be reported as a deduction from the total bonds payable issued. So to get the carrying amount, bonds payable nga 5 million less treasury bonds nga 1 million is equal to 4 million. Mano siya ang bond payable issued and outstanding na bilin. Then add sa premium on bonds payable nga 160,000 is equivalent to 4,160,000, and that's the carrying amount. Now, bond refunding. It is the floating of new bonds payable, the proceeds from which are used in paying the original bonds. So, simply stated, bond refunding is a premature retirement of the old bonds payable by means of issuing new bonds payable. Bond refunding is also known as bond refinancing. So, mura siya ka ng utang, nangutang ka para ibayad pud sa utang, kay kaning bond refunding kanang floating siya ba, kay kanang nangutang bag-o nga bonds, new bonds, purpose ani kay para mabayaran ang katong old nga utang, katong old bonds. So dara ay katong this is used in paying the original bond. Mao'y gamit sa bond refunding, mao'y purpose. For illustration, issuance of new 10-year 10% bonds payable with face amount of 1.5M for 1.6M. Refunding of old 12% bonds payable with remaining life of 4 years at 102. So, journal entries to record issuance of new bonds payable, debit to cash 1.6 or 1,600,000, credit to bonds payable nga 1,500,000, and then credit also to premium and bonds payable 100,000. This is the difference from 1,600,000 and 1,500,000, 100,000. And then to record the retirement of the old bonds payable, debit bonds payable nga 1 million, and also debit loss on extinguishment of bonds 50,000. Credit to cash 1,020,000, and then credit to discount on bonds payable 30,000, 150,000. So balance ra ang debit and credit. So the loss on extinguishment of bonds is represented by the refunding charges of 50,000. So ang kaning 50,000 gikan ni siya sa katong unamortized discount on bonds payable nga 30,000. I-add ang redemption premium nga 20,000 kay gikan ni siya sa 1 million times 2%. Kaya di ba ang sa new kay 10% man, and then sa katong sa old, refunding of old katong bonds payable kay 12%. So the difference ato nga 2% kay mo ni siya 1 million times 2%, so 20,000. Sunod, another na pod nga kanang more other ways on computing the 50,000. Bonds payable nga 1 million less sa discount nga 30,000. Discount on bonds payable, that's 970,000. Accruing amount less pa jud sa retirement price nga 1,020,000. So mo to siya loss on extinguishment 50,000. Diba kay gimention ba nga ang katong loss on extinguishment of bonds is represented by the refunding charges. 50,000 charges.
A pleasant day, everyone. Today, I will tackle about the amortization of bond discount or premium. There are three approaches in amortizing premium or discount on bonds payable: straight line, bond outstanding method, and effective interest method, or simply interest method or scientific method. Next slide. So, we all know about the straight line method, but let us still recall what it is. So the straight line method is a way to evenly distribute the amortization of bonds, premium, or discount over its life by dividing the premium or discount with the number of periods until maturity. You can determine the periodic amortization amount. This method assumes equal amortization amounts throughout the bond's life, starting from the sale date until the maturity date. Next slide. Bond outstanding method. The bond outstanding method is used for serial bonds with multiple maturity dates. It focuses on a decreasing balance of the bonds payable and adjusts the interest expense accordingly. I have given an example, which is a bond with a face amount of 5 million are issued and matured at the rate at 1 million every 5 years. So it's like ang 5 million divide mo siya sa pila ang iyahang maturity date, like pila iyahang maturity period, which is 5 years. That's why na siya maturate na 1 million every year. Now let's go to the accounting year and bond year coincide. So this is like a given lang, more like an illustration. Face amount of bonds payable 5 million, issue price 5.3, date of bonds January 1, 2021, date of issue January 21, interest rate of 12%, semi-annual interest dates are June 30 and December 31. The bonds mature on every December 31 of each year at the rate of 1 million for 5 years. Now let's go to its table of amortization. Since ang giingon man dito sa given is 5 years, right? So, na-issue siya ang bond at 2021. So, mag-start ita at 2021, then until 2025. Since ang na-issue man nga, since ang na-issue, ang face amount sa bond kay 5 million man, so, ang 2021 nato will always start at 5 million. 2022, 4 million. Kaya since nakaingon man siya dire man niya specify nga the bonds mature every 31 of each year at the rate of 1 million for 5 years. So, sa nagka-2020, sa nagkataas ang life, like 2021, 2022, 2023, 2024, 2025, magka-deducted siya og 1 million every year. So, like 5 million sa 2021, 4 million sa 2022, and so on and so forth. Now, diri na ta sa fraction niya. Ang usual technique na nahibawan ako since last sem sa Intac 1 is muna siya 5 years, di ba? So himuon ako siyang 5 plus 4 plus 3 plus 2 plus 1 equals 15. Then ako siyang i-divide sa og pila ang iyahang bond outstanding. So, for example, ang 2021 is 5. Ang fraction niya is 5 divided by 15. Nasa lain technique. You could add everything, the bond outstanding, it will still total to 15. Pero 15 million nung lagi. Pero ang imuhang point lang dara is like the 15 lang. Then ang 5 divided by 15, 4 divided by 15, and so on. Then muna na siya ang imuhang premium amortization. So, wala siya. The annual premium amortization is computed by multiplying the fractions with the amount of the premium. Thus, for 2021, 5 divided by 15 times 300 equals 100. Now, let's go to its journal entries. So, pag 2021, kay namantay so, pag 2021, kay namantay na dawat na cash ay issue price, right? Muna siya kitawag na issue price. So, ang atong mabutang dito siya kay cash. Then, atong butang kay bonds payable. Kay, naman tayo face amount of bonds payable nga 5M according sa given. Now, ang kaning sobra, unsa man ni siya ibutang? Dili na siya ibutang sa premium on bonds payable. Silbi mo na siya ang nasa issue, na issue ni mga bond. Karon pag June 30, interest expense. Kay namin nakabutang sa sa given na semi-annual interest dates. So, mahog na ni siya nga imo siyang katunga. Tapos, moto siya, 5 million man ang imuhang issue bond. Halagi, imong bonds payable. So, since 5 million man siya, tas naasad kay 12% na interest, imo siya i-times. 5 times 12%, tas i-times nimo sa katunga, 6 divided by 12, kay duha man, semi-annual man nakabutang, mo na siya 300,000. Pwede sad siya if imo siyang i-5,000. Ay, 5 million dahil, sorry. Pwede sad siya nga, 1/2. 1.5. Kung dili ka ganang sa mura siya atong simplify lang. Then mo na siya 300k. Susunod siya December 31 kay interest expenses sad kay since kaduha man ang interest niya, kaduha sa dapat siya nimo isuwat. Ang naaman sa given kay June 30 and December 31. So dapat ang imong ibutang sa diri sa imong journal entry kay pag June 30 nga interest expense o pag December 31 nga interest expense. Now, nga dito sa premium bonds payable. Dire na ta mag-base sa ato ang diring table of amortization. Kaning na may annual premium amortization man niya. Since annual naman na naman to sa kinalasan, mo nang mabutang ni mo dira ang 100,000 then ang interest expense 100,000. Bonds payable kay bonds payable na 1 million, then cash debit na bonds payable, then credit to cash na 1 million is the payment of the first series of bonds. So, since 2021 pa man ta nag-watch, 2021 pa man to siya nga table, ato ta mag-base sa 2021 nga years sa table of amortization. O pila ang naiban sa bond outstanding padung sa 2022 kay mag-open naman tag bag-o na sad. Mo sad imo ibutang dito sa premium amortization nimo. Nga premium on bond payable pag December 31 katong 100,000. Next, kay pag June, pag 2022, same gihapon. Ang ato ani, kikatong interest expense na niya. For a while. Actually, sa'yo pong akong PPT, I am very sorry. But the interest expense, kasi since iba na naman ta, dapat 4 million na siya. So, ang interest expense na to is 4 million. 240. Debited to 240, then credited to cash na 240 kaya nagbayad man ta. And since manang 240, kaya syempre, 2022 na ta. If imong i-base balik sa tatong table, ang table dito kay 4 million na siya ang 2022. So, dito ta mag-base. So, 4 million times 12% divided by 2 or 1.5 or 6 or 12. Either. Same rag answer, 240. Since kaduha man ta nag-interest, ay semi-annual man ang interest, ato sa December 31. Same gihapon, 240. Then, hantod sa mag-base ng gihapon ta sa table of amortization. Dito jud importante jud kayo ang table of amortization kay pag Kay if sayop ang table of amortization nimo, wala sayop ang imong journal entries. Either both. Basta ang main component na dito kay ang ato ang table of amortization. We should always know how to solve that one. Kay if dili if atong tan-awon ang ato ang 2021 na journal entries, if imong tan-awon atong premium bonds payable, dapat same jud sa ato ang premium amortization. Same goes sa 2021 to, same goes sa 2022. Ang ato ang interest diri ay atong premium on bonds payable kay 80,000. Kay syempre, atong 4 million times 4 divided by 15 is equals to 80,000 lang. Muna siya ang ato ang premium amortization. Next is atong bonds payable. Of course, same gihapon. O pila ato na deduct, mura gihapon ito what? Bonds payable na 1 million, debit na bonds payable na 1 million, then cash na 1 million. Second series na siya, hantod sa mahuman ng 2025. Mura dyan na siya. Now, let's go to premature retirement of serial bonds. So, when serial bonds are paid on the regular maturity dates, no accounting problem arises because no unamortized discount or premium is related to such serial bonds. Serial bonds retired. So, the problem occurs when the serial bonds are retired prior to their scheduled maturity dates. In this case, the retirement calls for the cancellation of any unamortized discount or premium on bonds payable related to prior to the serial bonds retired. The question is how much unamortized premium or discount bonds payable is applicable to the serial bonds retired prior to their maturity date. Let's go down to the example ayon, illustration. So, using the preceding illustration, katong table of amortization, same na to siya. With a face amount of 1 million scheduled to be retired at December 31 and retired at 103 on December 31, 2020, 2 years prior to their redemption date, the following procedures may be followed in determining the unamortized premium or discount related to the prematurely retired serial bonds. So, accounting procedures ata. Find the ratio of the total premium or discount to the fraction's common denominator in the outstanding bond total column. The annual amortization rate is represented by this ratio. So 300,000 divided by 15 million. Diin tag 300,000. Of course, sa katong total nga premium amortization. Ang 15 million kay total premium total bond. Total bond. So that gives you 0.2 rate per year. Now, multiply the rate computed in number 1 katong 0.2 by the face amount of the bonds retired. The answer gives the unamortized premium discount per year related to the bonds. So since every year kuan man taog 1 million no, muna siya atong i-divide i-multiply so 1 million times 0.2 is equals to 20,000 unamortized premium per year. So next is divide the time from the date of retirement of the bond schedule maturity date by the unamortized premium or discount per year calculated in number 2. The unamortized premium or discount that applies to the retired bonds and should be cancelled in the solution. So, $40,000, 20,000 times 2 years. Yeah. 40,000, 20,000. So, unamortized premium related to the face value is retired. Na siya. Sunod is journal entry to record the retirement of the 1 million face amount of bonds payable. So, ang bonds payable man to kay 1 million, di ba? So, sa itong premium bonds payable kay 40K. Sunod, yung atong cash kay 1 million times 103, 40K is equals to 103 times 40,000 is equals to 1,030,000. So, gain on early retirement bonds is 10,000. Proceed ta. So, revised schedule of premium amortization na ta. Ano ta sa revised? Now, sa revise kay ang original premium mo na to, di ba, kay total 300. Karon kay mag-cancel naman ta, mag-premium cancel naman ta. Katon 20k. Katon duha ka 20,000, mo to siyang 40. So ang revise na niya kay imo na imong na 300,000 i-minus nimo sa premium nga cancel katong 40,000. Ang revised na nga premium amortization nimo is 260,000. Now, ang accounting kanina sad, accounting year and bond year do not coincide. Kato siya kay coincide man to kani kay dili na sad. We will money siyang given tatardo. Sorry. Now, same gyapon, same procedure. Himo tag amortization table from April 1 to March 31, 2021. Same ra gihapon kalabasan. Same explanation lang gihapon about the fraction and all. Now, in terms of the revised amortization schedule, kay since now, kay layo naman kaayo ang for a while. Now, since for a while na sa nagbuang ako phone. Okay. Now, from April 1 to December 31 is 100,000 times 9.5 equals 75. Pag 2022, January 1 to March 31, 100,000 times 3.5, 3 over 12, 25K. April 1 to December 31 is 80,000 times 9 divided by 12, 60. So, 85. Ang 2023, kay January 1 to March 31, 80,000 times 3 divided by 12 is equal to 20. And so on and so forth. Next topic. Now, let's go for the journal entries. Same gapon, cash, debit cash, then credit discounts on debit cash and discounts on bonds payable for 47 and 300,000. Then credit bonds payable na 5 million. On October 1 sad, debit interest expense, then credit cash na 300,000. Next is debit interest expense and accrued interest payable for 150. And interest expense and discounts on bonds payable na 75,000. That's for 2021. Let's go for 2022. Now, debit account interest payable and credit interest expense for 150. This is for the reversing entry. Then, same goes with the April 1. Debit interest expense, debit bonds payable, credit cash. So, and the debit interest expense for 300,000, debit bonds payable for 1 million, then cash for 101 and 3 million. Sorry, wrong na ang akong table. The next is interest expense and debit interest expense and credit cash for 240,000. Debit interest expense 75,000. Credit accrued interest expense payable and accrued interest payable for 75,000. Now, interest expense also debit 85,000. Discounts on bonds payable for 85,000. Muna na siyang amortization for 2022. Let's go to the fair value. Fair value option of measuring bonds payable. Sorry. So, PFRS 9, paragraph 4.2 allows bonds payable to be designated as fair value through profit or loss upon initial recognition. This means that these bonds will be initially measured at their fair value and subsequently revalued at each year end, with any changes in fair value being discretely recognized in a profit or loss statement. There is no longer any amortization of bond discount or bond premium, and any transaction costs or bond issue costs are immediately expensed. Interest expense is recognized using the nominal or stated rate of the bonds. Let's go down to the illustration. On January 1, 2021, an entity issued bonds payable with face amount of 5 million and 12% stated interest rate for 5,380,000. The bonds are sold to yield 10% interest is payable annually on December 31. The entity paid bond issue cost of 100,000 on December 31, 2021. The fair value of the bonds payable is determined to be 5,300,000. The entity selected the fair value option of measuring the bonds payable. Let's go down to ano na. Yeah. Now, journal entries for 2021 na. Since naman siya naka-state naman dito nga issued bonds payable with face amount of 5 million and interest rate of 5,380,000. So ato ibutan diri kay cash, debit cash, and then credit bonds payable for 5,380,000. Then the transaction cost is 100,000. Then ang cost is 100,000. That is for January 1 only. Okay, naman siya the entity paid bond issue cost. So, muna na siya. Everything is in the given lang dyan. So, interest expense kay 600. So, how? Cash nga, naman sa given, it was stated that 12% interest rate. Karon kay 5 million man ang gi-issue na bond. So, ang 5 million times mo sa 12%, mo na siya 600,000. And then the bonds payable and gain from the fair value is 80,000. Now, bonds payable on January 1, 2021, katong total dyan kay 5,380, di ba? Tapos ang fair value nimo kay 5,3. So, ang decrease in the fair value of payable gain is 80,000. Next, change in fair value recognized in OCI. According to PFRS 9, paragraph 5.7.7, when a financial liability is designated as fair value through a profit or loss, the portion of the fair value change due to credit risk is recognized in other comprehensive income. Credit risk refers to the risk of the issuer causing a financial loss by failing to meet obligations. It does not include market risk like interest, currency, or price risk. So B, the remaining fair value change is recognized in profit or loss. If presenting the change in fair value due to the credit risk creates and enlarges an accounting mismatch, all gains and losses, including credit risk effects, are recognized in profit or loss. An accounting mismatch occurs when showing credit risk changes in other comprehensive income. Significantly differs from presenting them in profit or loss. Amounts recognized in other comprehensive income from changes in fair value of credit risk for a financial liability designated at fair value through profit or loss cannot be later transferred to profit or loss. As per application guidance B5 7.9, however, the cumulative gain or loss recognized may be transferred within equity or retained earnings. Now let's go down to another illustration. On January 1, an entity issued bonds payable with a face amount of 5 million and 10% stated interest rate for 4.8 M or 4,800,000. The bonds have a 5-year term and interest is payable annually every 31. The entity selected the fair value option is measuring the bonds payable. On December 31, 2021, the fair value of the bonds payable is 5,500,000. It is reliably determined that the fair value increase 700,000 comprised 200,000 attributable to credit risk and 500,000 attributable to change in the market interest rate. Now, let's go to the journal entries. This will be the last slide. So, like the cash is 4.8 because 4,800,000. Then bonds payable is 4,800,000. Interest expense 10% and 5 million. So totals to 500,000. Interest expense, debit interest expense, credit cash. Then the loss on credit risk OCI is 80,000. Sorry. Then the loss on the change in fair value is 80,000. Bonds payable is 700,000. The loss on credit risk is presented as component of other comprehensive income. The loss from change in fair value is recognized in profit or loss. And that's it for our that is it for our report on Chapter 5 on bonds payable. Bonds payable fair value option.